Another nice week last week. And today we're going to get our numbers on inflation. Looks a little bit better than it has, but remember, inflation is cumulative. For those of you keeping score, prices across the board are up about 20%. But if you want to buy a used car, I think prices are a lot worse than they were when Joe Biden fell asleep in the Oval Office for the first time. Nick Hopwood is a certified financial planner, founder at Peak Wealth. President at Peak Wealth. Nick, good to have you back. Looking at the numbers here.
Glad to be here.
Inflation's going to be better, it seems. 3.1, 3.3, somewhere in that range. But really, man, people get beat up by inflation every day because it just stacks on top of itself month after month, and in this case, 3 years in a row, right?
That's right. 3.3 is the expected headline this morning from the Feds. However, we do have that cumulative effect, and it is a few years here now. So we have this one-time, big-time bump, but we are leveling off, so that is the good news for the future.
Well, that is good news. All right, so the SPY up 5% or more for the year at this point. November 15th, the market has finished 22 times higher straight. Tell me, what is the SPY in capital letters?
Yeah, SPY is just an ETF that tracks the S&P 500. So when we spout out these stats, just think of the S&P. And at this point, mid-November, we're plus double digits year to date for the S&P. But at this point, when we look at history, if the market is plus 5% through mid-November, the last 22 times in a row, we actually finished higher. So the returns between November 15th and December 31st were positive.
So that's good news, right? Good news for investors, good news for those that are retired or being retired soon. But what do you make of this headline? A downgraded U.S. credit rating from stable to negative came from Moody's. Moody's has given the United States a AAA credit rating since 1917 without fail. People think that could change. What would that mean to our financial situation, our stability here?
Well, they joined AM Best, who earlier this year downgraded the debt, and S&P, who downgraded the debt back in 2011. So Moody's is piling on here. They didn't actually cut the debt rating, but they downgraded the outlook, suggesting that there are downside risks to our country's strength. What does it mean? Well, it's just kind of a warning shot, in my opinion, but it does come, with the anticipation of more shutdown threats just this week. So I think the timing there is peculiar, but I don't think that it changes anything for our investments or our financial plan. But it does kind of think of it as like a red alarm with the country's debt.
Yeah. As I look at other potential red flags here, one of the things that I don't understand, Nick, and maybe you can help me with this, housing. Interest rates have gone up. You would think that prices for houses should go down. That'd be cause and effect, but it doesn't happen that way. It has not happened that way. In fact, the price of housing remains high, although more houses are selling at asking price, or people are actually offering a bit lower than asking price. That didn't happen a couple of years ago, but it's happening now. But still, houses in hot demand, even with interest rates at 7, 8, 9% in some cases, right?
Yeah, the housing prices are staying high, stubbornly high, I will add. And I think it's all about supply and demand. So there are people that need housing, but maybe they can't afford that 8% rate, okay? But then there's also people that are looking to sell, but they can't afford to give up their 3% rate to go into a new 8% rate. And so we just have less demand, but also way less supply. And so they're just kind of equaling out at these current prices. We'll see what happens in the spring. We might have lower rates, we might have a new group of buyers coming into the market. But right now, there's not much happening. Prices are staying high.
Right, and one of the other things, you and I talked about this a bit in the break before you came on, property taxes. I don't think a lot of people consider property taxes when they move or try to downsize. But the way taxes are in some areas, if you downsize and go to a higher tax area because you want a nicer home, a better neighborhood, whatever it might be for your retirement, be careful with that one because you could get burned, right?
Absolutely. This one strikes a nerve for me. We reduced our square footage by a full 50%, but because we went from the township to the city, our taxes went up a full 50%. Smaller house, larger taxes, and resetting that tax base. It's a major problem for folks who want to downsize, but just in general, if you move, right, your property taxes are becoming a growing percentage of your total expenses, and it's a major problem, and I don't think enough people are talking about it.
Yeah, so, I mean, are you suggesting then, because look, the property taxes increase when there's a sale of the home, right? It went from the previous owner to the new owner. Even if you homestead that home, make it your primary residence, you could get pinched on property taxes, which may change your complete outlook.
Yeah, a lot of people talk about selling their single-family home and moving to a condo for retirement. Well, generally speaking, condos have less property taxes than a single-family home, but not anymore if you had a low price on a low property tax on your old house, plus you're adding in an HOA. Steve, I have a new client who joined us from a loyal Gruber viewer, and her HOA is $709 a month, and I couldn't believe it. I mean, couldn't you outsource your mowing and snow removal for $709 a month?
I think it could, but I don't know actually. The cost of getting your lawn mowed these days, I mean, those guys, they're working all the time too. They're in demand. It's hard to get employees. Their prices have gone up. The price of gas has gone up. The price of diesel has gone up. The price of getting used trucks has gone up. So the people who do your yard and plow your driveway, yeah, they might get more than $709, honestly, right?
Well, I mean, it's an interesting thought experiment, but I see, $50 a week for mowing, even on a small city lot. So the price is going up. But I would just warn people, if your retirement goal is to downsize, keep in mind the price of the HOA, keep in mind the new property tax bill. You will probably unlock value when you sell, but you might have to use that money to pay these extra increases.
All right. So, and you've got some exercises to have people kind of work through and make the decisions and make good decisions. It's important. And they can find some of that at Peak WM, right?
Yeah, peakwm.com. We have a set of blueprinting exercises. You wouldn't build a house without the blueprints. Let's build your financial plan from a strong starting point. Let's talk about the blueprints, which ultimately are what are your goals for the short term, midterm, long term. And if you have a goal for a second home in retirement, these things need to be addressed now and planned for now. A lot of times people decide they want a second home after retirement, and it just won't work unless you plan in advance.
All right, let's get that QR code up for the people that are paying attention on TV. PeakWM.com, PeakWM.com. Get your blueprint. You can talk to Nick Hopwood. Talk to a financial professional. Get a second opinion. There's the QR code on the screen. If you've got a smartphone and you're watching this program on television today, just click that and away you go. And if you're listening on the radio, thank you for being here. PeakWM.com. Nick Hopwood, always appreciate you being here.
Thank you, Steve. My pleasure.
There you have it. Always get good information when it comes to your finances and your future. When we come back, let's see here. When we come back, better get it quick. We're going to have Peter Galuli from the Wellness Company. Don't go.